Hello and welcome to today's webinar with Linden Gold Alliance. Thank you for joining us. Today you will hear from Linden Managing Director Andrew Rich. In his presentation, Andrew will outline Linden's pre-IPO capital raise, which will be open to sophisticated investors, as well as the strategic debt restructure with St Barbara, which was announced last week. Andrew will also highlight Linden's gold operations in Western Australia, including the in-production Second Fortune gold mine and the Devon joint venture project with Matsa Resources. Before we get started, a quick reminder that Andrew will be available to answer questions following the completion of the presentation. Please submit these questions in your Zoom app as early as possible to allow us to move into the Q&A. Now over to Andrew, who will be presenting from Kalgoorlie today. Thank you, Andrew.
Thanks, Ben. Good morning, ladies and gentlemen. For those that don't know me, my name's Andrew Rich. I know there's quite a few of our existing shareholders on this call, but I think there's a few others here that might be new or looking to invest. As Ben said, I'll be discussing our pre-IPO capital raise and the strategic debt restructure. Just to note that pre-IPO capital raise is only open to sophisticated investors. There'll be a bit more detail on how you can participate at the end of this meeting. So just a little bit more on me. Mining engineer. I graduated from the School of Mines out of Kalgoorlie, and from there went to a number of different mining operations in different commodities, gold and nickel. And I've been lucky enough to have the experience of building 3 different operations now, 3 different mines, for 3 different companies, being Linden Gold, Westgold, and Ramelius. Linden Gold, look, we're a junior gold producer, producing one of the highest grade mines in that South Laverton area. In fact, we're one of the only producers in the region there, surrounded by a number of quite underutilised and hungry mills, and provides us plenty of options in terms of processing. We're the right place at the right time, and with this proven track record now of building and operating mines, we took Second Fortune, which was a flooded mine back in September of 2020, and brought it back into production within 7 months timeline. It's now been a consistent producer for over 2 years. And coming off the back of an excellent couple of months, being March and April, where we generated over 1.6 million in free cash flow. We're focusing up there at Second Fortune on key being margin over ounces, targeting a sustainable, consistent producing 20,000 ounce production profile from Second Fortune, and looking to really continue that in the years to come. More importantly, we just recently are in the process of completing the debt restructure, which really resets us our valuation and strengthens our balance sheet. The deal with St Barbara is to forgive 10 million in debt. We currently owe 21 million, so it's a reduction of almost 50% there. That's significant for us because it reduces our enterprise value from 35 million down to 26 million, but doesn't impact on our existing shareholders' equity, but also gives some enhanced valuation upside. So we've agreed with St Barbara that we'll repay that remaining 11 million of debt through 8 million in cash and 3 million in scrip. And we're currently in the process of completing that debt restructure, aiming to complete that in the next 4 weeks. We process our ore at Second Fortune up at Gwalia under an ore purchase agreement with St Barbara. Obviously, everybody's seen the recent negotiations with Silver Lake and Genesis for potential an asset sale of the Gwalia operations. We're in the process of rewriting out our ore purchase agreement with St Barbara. We have an NBIO signed with St Barbara, and our new ore purchase agreement will roll over to any new owner of the Gwalia operations. So the ore purchase agreement has us processing out to the 31st of December this year, with an option to extend out to 30th of June 2024. And again, that will get assigned across to any new owner. So there's no risk for us at Linden Gold that processing is suddenly going to stop for us anytime soon. Last year in December, we signed a joint venture, 50-50 joint venture with Matsa for the Devon pit, which is 10 kilometres to the north of Second Fortune. While it's a 50-50 joint venture, it's actually a 60% economic interest on the JV cash flows back to us. So we recoup quite a lot of cost that we spent pre-production before we split the profits 50-50 with Matsa. Last week, we released our scoping study on Devon, which demonstrated a really high-grade, robust open pit project there at Devon, generating over 42,000 ounces over 5 grams with all-in sustaining costs of less than 1,600 per ounce. At a spot gold price, that generates over 50 million in free cash flow for just a 16-month project with a relatively small capex of only 5 million. It's only 10 kilometres to the north of Second Fortune, which really allows us to leverage our existing operations and infrastructure base down there at Second Fortune, and really just serves to reduce those all-in sustaining costs and all-in costs up there. Currently completing the DFS, and that's due for release in August this year, and we're well on track to deliver on that schedule, followed by a final investment decision towards the end of this year. All going to plan, we'll be looking to get that mine into production in Q1 of 2024. Exploration, we're targeting mine life extensions out there at Second Fortune. We're quite a shallow mine, being only 275 metres in depth, with many mines around us going well over 1 kilometre. So it's still quite early days there at Second Fortune. We're confident there is a lot more ore below us at depth, but not only at depth, along strike as well. Looking a little bit more regionally, we've got a number of prospects that have got high-grade drill results on them, and we'll be looking to expand that, as there's been over the course of the last 10 years, there hasn't really been a systematic exploration program across these Linden Gold tenements. Granted, we've only had the tenements for about 3 years now, but our primary focus has been getting Second Fortune into production, consistent production, making money, which it's doing. And now we want to focus on that systematic exploration, given we are along strike of a number of Tier 1 assets, including Sunrise Dam, Granny Smith and Carosue Dam. Our exploration targets are for similar to what we're doing at Second Fortune, margin over ounces. It's in our DNA to try and produce these low-cost, high-grade ounces, and we want to continue that track through our other tenements around Second Fortune. Pre-IPO raising, we're looking to raise 12 million as a pre-IPO, and that funds the debt restructure and gives us a bit of growth capital, Second Fortune and Devon. With the post-EV of 26 million, we think that's quite attractive value for incoming investors, and again, doesn't impact our existing shareholder base in terms of their equity value. Once we've completed that pre-IPO raising, that puts us in an excellent position to go and get the IPO completed, and we'll be pivoting towards that IPO straight away after the pre-IPO is done. The IPO round would be looking to do 2 to 4 million in IPO, and that's more of a compliance style listing to get listed on the ASX. And given that we've completed the pre-IPO, or will have completed the pre-IPO, and have over 150 shareholders, we're significantly de-risked in terms of executing that IPO. We've put together a board and management team that's got experience in not only managing mines, but building them as well. So we've got a lot of experience here to get this IPO listing completed, and moving forward with not only organic growth, but some smart M&A transactions as well. We want to be a 100,000 ounce producer, with Second Fortune doing 20,000 ounces and Devon soon to be in production. That puts us at about a 40,000 ounce run rate. And we've got the team to continue building that and adding additional operations to get to that 100,000 ounce run rate. The debt restructure for us, it's been a really significant thing. It's taken a bit of negotiation, but the ultimate result is we were able to reduce our debt by 10 million, reduces our EV by 26%, going from 35 million down to 26. And importantly, it doesn't impact on our existing shareholders' equity value, so that remains the same at 15.5 million post the debt forgiveness. That really strengthens our balance sheet, takes the brakes off us at Linden Gold, and puts us in an excellent position to go and do the IPO following this post the raise. We're situated in an excellent postcode up there in the Laverton tectonic zone. There's a number of Tier 1 assets along strike from us, and also further abroad to the west. It's a prolific zone for gold. There's a number of quartz outcroppings and old workings on the Second Fortune Linden tenements. Like I said before, we're really looking to complete that systematic exploration that hasn't been done on our tenements, and really open up what we think is a number of resources that sit on our tenements. And there's really no reason why we can't have something as significant as Sunrise Dam, Red October, Deep South, Carosue Dam on our tenements. It's just the drilling hasn't been done. It's something we want to change, and we'll be doing with the funding from the pre-IPO and the IPO round. Out there at Second Fortune, we've had some nice consistent production, building on the grade from when we first started there at Second Fortune. It was down around 3.2 grams, but glad to say that through some optimization from the underground, we've managed to increase that to consistent 3.9 to 4 grams more recently. The tonnage and ounce profile is now nice and consistent. At Second Fortune is a cash flow positive, consistently producing mine. Now we're in the position where we want to extend that mine life out through extra drilling, both at depth and along strike. The mine life at the moment is out to December of 2023, but looking to increase that with inferred resources currently out to June of 2024. We're looking to try and convert them into indicated with additional drilling coming up in the next few months. As I mentioned earlier, we're quite shallow out there at Second Fortune, only 275 metres in depth, given most mines around us are well over a kilometre. It's still quite early days for Second Fortune, and I can see that we're going to be out there for years to come. The Devon open pit, 10 kilometres to the north, that's really looking forward to getting that into production. It's a high grade open pit, which matches pretty similar to what GME Resources did back in 2015, 2016. When they went mining up there with a smaller open pit, they produced similar grades to what our scoping study is indicating. We released our scoping study. We're in the process of doing the DFS. We expect that DFS will be released in end of August. And given the scoping study, scoping studies are plus or minus 40% in terms of costing. I'd like to think that ours is a lot more accurate, given that in our scoping study, we've used costs from our existing haulage contract, our existing processing contract, and of course the operational costs out there at Second Fortune in terms of accommodation, flights, and G&A costs. So we've got a really good handle on what it takes to run a mine of that operation and that size. And therefore our scoping study we think is pretty accurate at this point in time, and building on that with the DFS due in August. Devon, at a spot price of 3,000, will generate over 50 million in free cash flow. In a more conservative base case of 26.50 per ounce, it still generates 37 million, which is an IRR of 479%. So that's really attractive value. It's quick to get into cash flow. It's quick production. It's a low capex startup, and it's only 10 kilometres to the north. So it's all shaping up to be a very high grade, robust pit for us, and immediately brings our production ounces up to that 40,000 ounce run rate. Over the course of the next 6 months, we've got a number of news flow items coming out, including mineral resource upgrades next month, followed by the ore reserve after the mine design's been completed. We'll commence the financing process for Devon, and with the DFS due in August, puts us in a good position to complete the financial investment decision towards the end of this year. We're in the process of completing all the environmental approvals that are required, and there's 4 major ones for Devon, of which we've submitted 2 of them already. The other 2 major approvals will be submitted at the end of this week. And given where we are at this point of the year, we expect we'll have all those approvals prior to making the investment decision in November, December this year. So we're well on track. Not expecting any issues with those approvals, and really puts us in a good frame to be producing out of Devon coming into Q1 of 2024. The offer details, we're looking to raise the 12 million. So the 12 million will be a 3 million placement, raising at 16 cents. That'll be 18.75 million shares issued. Stapled to that 3 million will be 9 million of convertible note. So for every $1 subscribed in equity, there will be $3 of convertible notes stapled to that. So total raise of 12 million. Upon notes, that converts at 50% premium to the issue price of 16 cents. So that's converting at 24 cents. It attracts a 15% per annum coupon. That's payable on a quarterly basis in cash, and maturity is 3 years from settlement of the offer. So it's quite attractive con note, we believe. And of that 12 million raised, 8 million will go as a cash payment to St Barbara that funds the part of the debt restructure. Of course, we'll give St Barbara 3 million in scrip, and that completes our debt restructure. And the balance of that 12 million, 4 million, will be working capital for Second Fortune, Devon, DFS, and of course transaction costs. when that 4 million will largely go into the ground at Second Fortune in and around our tenements in terms of exploration and growth. The pro forma offer details. So we've got 97 million shares on issue at the moment. We'll issue nearly 19 million shares under the placement, another 19 million shares to go to St Barbara as part of the debt restructure, which puts us at 137 million shares on issue post the offer, all at 16 cents. That will put St Barbara at 19.8% shareholding of Linden Gold. Our placement shares will be 14% of the register. Our existing shareholders are 40%, and the Linden Gold founders are sitting there at 27%. There is some options that will get issued as part of the offer. Total options on issue are 34 million. Part of those, 15.5, are related to performance securities for myself and my CFO, Sam. And we have 4 targets to meet to achieve those 15.5 performance securities. They're all performance gates that relate to the growth of the company in terms of increasing the share price, growing the resources, and getting Devon into production. So if I can hit all those, the company will be doing very well at that point. Our shareholders will be doing very well, and that will allow me to achieve those performance securities. In terms of the offer timetable, this week we're completing the presentations to our existing shareholders. We'll start having the discussions to the desks, respectively, of our JLMs, Canaccord and Argonaut, and then followed by next week being the formal pre-IPO roadshow. The week after being Monday the 5th June. We'll start the book build process and aiming to settle the funds by middle of June. That puts us in a really good position to complete the IPO, given we've done a lot of the work already for the IPO. It's not going to be a long timeline, and aiming to achieve that IPO listing in Q3 of this year. Indicatively on the IPO itself, after the pre-IPO raise of we'll have 137 million shares on issue. Depending on the size of the raise on IPO, we're looking to target between 2 million and 4 million raised. That'll be between 10 and 20 million shares additional issued, putting us at a pro forma share issue of 147 to 157 million shares at 20 cents. That puts us at a pro forma EV of somewhere between $31.5 million post IPO. So we still think that represents quite attractive value on IPO for both our existing shareholders and incoming investors. And you can see the pro forma shareholder breakdown once we achieve that IPO. St Barbara will be still sit there at 17.5%, incoming investors at 13%, 34% of existing shareholders, and 24% of the original Linden Gold founders. That really completes the main body of the presentation. If there's any questions, happy to answer them. A copy of this presentation will be released to sophisticated investors in due course. And there is some supplementary slides and an appendix attached to this that run through a few more of Second Fortune in Devon in detail. So I think I'll throw back across to Ben if there's any additional questions to ask, and I'm happy to answer them.
Great, thank you, Andrew, for that very comprehensive presentation on the pre-IPO raise and also how Linden plans to use those funds. It's also impressive to see a junior gold company that's heading towards an IPO already in production and with a number of exploration prospects in its portfolio. So before we start on the Q&A, just a quick reminder for our listeners here today, it's your final chance to ask a question if you have one. So you can please take care of that now in the Q&A part of the Zoom app. But we do have a few questions that we can get started on. If you're ready, Andrew, I'll ask the first one. So Linden does currently sell ore to St Barbara. So what risks do you see with the longer term milling with St Barbara and others in that region? And for example, is there enough capacity there to take the production from Second Fortune or Devon or potentially other mines as well?
Yeah, so there's been a lot of talk in the industry, and everyone I'm sure has seen the Silver Lake and Genesis dealings and offers going across to St Barbara quite recently. For that reason, we were were understandably nervous about where Linden Gold sat in terms of processing going out till next year. As it currently stands, our processing agreement does expire 30th of June. We do have an NBIO signed with St Barbara to continue processing through till the 31st of December this year, with an option to extend out till June of 2024. I might just jump into the slide. Yeah, so to continue processing out to 30th of June 2024. We're in the process of writing the ore purchase agreement with St Barbara, and that will get assigned across to any new owner of the Gwalia operation. So we've got comfort that we are going to be processing with out at Gwalia at least until 30th of June 2024, and we don't see any risk to that for existing shareholders. Now, for Devon, we're in the process as part of the feasibility study assessing what milling opportunities there are around, and there are a few. There's a number of hungry mills in and around Devon, and while we've got the ore purchase agreement sorted for Second Fortune, we're still discussing what the best option is for Devon. And there is a few options, a few that are represent better value than others potentially, and we're assessing those at the moment and aiming to release the results of that and a binding contract by the end of August this year.
Okay, sure. And I've just received a question which does flow on from the toll treating extension. So will binding agreements be in place for the toll treating agreement and debt forgiveness prior to the settlement of the pre-IPO?
Yeah, that's right. So we're in the process of writing both of those. The debt forgiveness agreements are getting constructed at the moment. The OPA is written and it's being verbally agreed with St Barbara, and they will both be signed before the settlement of funds occurs.
Okay, no problems. All right, next question, just around Linden's exploration programs. Linden does have a number of exploration prospects in its portfolio, of course. So which of these is or are the company's priorities, and how does the company plan to budget its exploration plans amongst these prospects?
Yeah, so the main one for us in terms of regional exploration actually only exists about 1 kilometre to the east of Second Fortune. We've got a 2 kilometre long structure running north-south there. We've got high grade at the north, we've got high grade drill results at the south, and absolutely no drilling in between those 2 points. It sits right underneath an airstrip, and I think it's always the case in WA, right? You go and look under existing infrastructure, a mill, a camp, an airstrip, and you're almost guaranteed to find gold, right? So we think there's huge potential for this to develop into a significant resource. And if you remember, I was saying that we sit along strike to Sunrise Dam, Deep South, and Red October. And there's absolutely no reason why we can't have a significant resource as big as what they have on our tenement package. And this represents the potential to be one of those. So with the 4 million that's left over from the 12 million pre-IPO raise, of course, there'll be some transaction costs in that, but the bulk of that money will be going towards drilling and exploration, both regionally here at Second Fortune, but also underground at Second Fortune as well. A little bit more regionally outside, we do have a number of high-grade prospects. These are all within 10 kilometres of Second Fortune. And as you can see, there's a number of high-grade shallow drill results from a number of different areas around Second Fortune. These are all on granted mining tenements. So in terms of wrapping a resource around them and getting them into production, we can do that very quickly. And we've demonstrated that we can get Second Fortune from a flooded mine into production within 7 months. We're not talking years here to get some of these into production in terms of resource development and then into a short or large open pit. So that's regionally, and then of course at Second Fortune itself, we'll be looking to explore at depth and along strike to try and increase the mine life out there at Second Fortune. We've already found some more out there to the south, and looking to put a bit more drilling into that to see if we can prove up a larger resource there.
Okay, a lot happening there potentially in the coming months, Andrew. So the next question I have is on the Devon project, which is of course moving towards a DPS due for completion in the coming months, in fact. Can you just highlight what you're trying to achieve out of the DFS and potentially what the development timeline might look like post the release? I know you've got the final investment decision coming up, but longer term, what might it look like?
Yeah, so what we're aiming to out of the DFS, I mean, we've just released the scoping study, which really builds off what MATSA had released in April of 2021. Of course, we've had a lot of cost inflation and a lot of changes since 2021. So we thought, even though we're underway with the feasibility study, we thought we'd release that scoping study, see where that put us in terms of the Devon pit, and just give us a little bit more confidence that we are going down the right path here. And that demonstrated a really high-grade, robust pit. We're very happy with the results of the scoping study. And as I mentioned earlier, we think the accuracy on our scoping study is probably a lot better than the plus or minus 40% because we have used our existing cost base for haulage processing and Second Fortune ops. So the DFS will build off the scoping study that we released. We did some drilling in March of this year and also in August of last year, some diamond drilling, looking to increase the size of that resource from what the scoping study had, and looking forward to releasing that updated resource next month, followed by a reserve, and then the DFS in August.
Okay, sure. We've got one more question. So Linden is in a great position for a junior gold company being, or pre-IPO being a producer with the exploration upside the company does have. In longer term, how does the company see this position evolving, particularly if Aussie gold prices can maintain the current strength?
Yeah, well, with our EV, for one, I mean, we were looking at an EV of 35 million before we did the restructure with St Barbara. So really happy with that result. We've been able to reduce that down to 25 million prior to the IPO. I think that demonstrates and presents attractive value for incoming investors, and importantly, it doesn't impact our existing shareholder base either. As you recall, we don't want to be a 20,000 ounce, 40,000 ounce producer. That's got us to where we are today, and it's got us to a cash flow producing, profitable mining operation, and it's going to get us to the ASX to get listed. So we think we've got a lot of growth coming. We've demonstrated we can get Second Fortune into production, we can get it making money, and now we're starting to build those stepping stones in terms of production rate to get us to that 100,000 ounce run rate. 20,000 out of Second Fortune, 20,000 out of Devon, we're at 40,000. We're well on the way to getting to 100,000 ounces, and we think we've got the experience and the know-how to get some of these other resources in and around the area, particularly with some M&A opportunities as well, to reach that 100,000 ounce target. So building, and we will get to 100,000 ounce. We've come a long way in a short space of time, and soon to be listed on the ASX, which will provide us with a really good platform to continue that growth.
Okay, that's a great summary of the bigger picture, I think. Thanks, Andrew. Next question I have, is the camp and associated infrastructure at Second Fortune in good shape? And how much would that cost today if it had to be built?
Oh, look, when we took over the camp from the previous owners, we spent a fair bit of money adding additional rooms. We put in a new kitchen, new mess, a new gym. We updated the wet mess. So we've come a long way with the Second Fortune camp. Look, is it 5-star, 6-star accommodation? Look, it's not, but we are committed to, as we get Devon into production, to improving the camp and lifestyle out there. We think it's a pretty reasonable camp. It's got all your mod cons in terms of internet and gym and mess and that, but there's always room for improvement, and particularly in today's operating environment. When people are away from friends and family, we really want them to feel at home up there at Second Fortune, and we'll try and do the best job that we can for them while they're away from their friends and family. In terms of what it would cost to rebuild today, it's probably in the region of $1.5 to $2 million. I'd probably be on the higher side of that now, probably closer to the $2 million, given the inflationary costs that we've seen in the last 12 months. And it's also not just the cost, it's the timeline to go and build something. We're in the, I guess, enviable position that we've already got a camp, we've already got operations, we've got workshops, we've got the airstrip, everything's there ready to go. You have a look at some of the other operations in and around the areas, that exploration companies that are trying to get into production, they've got a long lead time, not only on building, but a high cost environment as well. So thankfully, we're not in that position. And if we do find additional resources in and around Second Fortune, we're in a prime position to capitalise on that without having to spend a lot of money or take a lot of time to put in additional infrastructure.
It definitely provides a great launching pad for where you're at the minute. What are some of the other facilities that you already have there as well that you can highlight?
Yeah, so we've got the camp, the airstrip, we've got the power station, we've got the workshop there locally at Second Fortune, ROMPAD, dewatering facilities. So we don't have a mill. It's we're on our own mill down the track, whether it's build our own mill or buy our own mill, but we need the resource base to substantiate that. So that's something we're working towards. But all up, if you talk about all the infrastructure up there at Second Fortune right now, you're probably talking somewhere between 15 and 20 million to go and rebuild that, and probably 12 months timeline to achieve it.
Okay, great. I think that's a great way to finish off the webinar. Thanks, Andrew. So thank you everybody for joining us today and tuning in. I think we've heard a great story. The narrative is strong with Linden Gold. As Andrew mentioned, he is available to answer any further questions you may have, and there will be a presentation made available too. But thanks again to Andrew and everybody else for joining us, and have a great afternoon and day.
Yeah, before everyone goes, thanks, Ben. Please feel free to contact myself or brokers, 2 JLMs, Canaccord and Argonaut, both very happy to have them working with us, and they're also happy to take calls if you're interested in investing. Of course, myself is also available for any questions. Thanks again.
Great. Thank you, everybody, and see you later. Bye.
Bye.